Are there tax benefits for paying college tuition? If you are a teenager thinking about college, you might be wondering how to manage the costs. One important aspect to consider is whether there are any tax benefits for paying college tuition. Let's break down the facts to help you understand how this works. First off, college tuition itself is not directly tax deductible. This means you cannot simply take the amount you pay for tuition and subtract it from your taxable income. However, there are some tax credits and deductions that can help reduce the overall cost of college. One of the main benefits is the American Opportunity Tax Credit. This credit can help you or your parents save up to $2,500 per student each year for the first 4 years of college. It covers qualified expenses like tuition, fees, and even course-related books and supplies. A nice perk is that up to 40% of this credit, which can be up to $1,000, is refundable. This means you could get some money back even if you owe no taxes. Just keep in mind that there are income limits, so if your or your parents' income is too high, the credit may phase out. Another benefit is the Lifetime Learning Credit. This credit can be claimed for any year of higher education, including graduate school or courses to improve job skills. It provides up to $2,000 per tax return for qualified tuition and fees. And like the American Opportunity Tax Credit, this one is non-refundable, meaning it only reduces the taxes owed and does not provide a refund if you owe no taxes. Again, income limits apply here as well. If you or your parents are paying interest on student loans, you may be able to deduct up to $2,500 of that interest from your taxable income. This can help lower your tax bill. Just like the other benefits, there are income limits to qualify for this deduction. You might also want to consider tax-advantaged college savings plans, often called 529 plans. While these are not direct deductions or credits, money saved in a 529 plan grows tax-free. Withdrawals for qualified education expenses, like tuition, are also tax-free. This can be a smart way to save money for college while also saving on taxes. Scholarships and grants are another way to help with college costs. If you receive scholarships or grants that cover tuition and fees, they are usually not considered taxable income if used for qualified education expenses. This means you won't have to pay taxes on the money you receive from scholarships that pay for tuition. It's also worth noting that the tuition and fees deduction, which used to allow some deductions for tuition, was ended in 2021. Tax credits like the American Opportunity Tax Credit and the Lifetime Learning Credit generally provide more savings than deductions because they reduce your tax bill directly. Understanding these tax benefits can be really helpful for you as a teenager. If your parents are paying your tuition, they might be able to claim these credits, which can help reduce the family's tax burden. If you plan to take out student loans, knowing about the student loan interest deduction can save you money later. Starting to save in a 529 plan early can grow your college fund tax-free, making college more affordable. Plus, applying for scholarships not only reduces what you pay but can also provide tax-free financial support. While you cannot directly deduct college tuition from your taxes, there are several tax credits and deductions related to education expenses and student loans that can make paying for college easier. Being aware of these options can help you and your family plan better and manage college costs more effectively.